in terms of the trade deficit, one of the parts that a lot of people kind of miss is that over the years, kind of there's been this unspoken agreement with the US versus the rest of the world. It's like America will buy your stuff and we'll sell you overpriced financial assets, right? Because if you think about it, if you go, let's just take, for example, the iPhone. The iPhone is built in China. Well, Americans are paying US dollars for them. So when they go buy all these, gajillion amounts of iPhones, usually what would happen is that you would pay for them US dollars. So you would have to buy renminbi or yuan to pay for those. And eventually what would happen is the price of the renminbi would go higher. But the trouble was China didn't want that to occur. So they stood in the middle and said, listen, we'll sell you the renminbi. And what we'll do is we'll leave the funds in US dollars and we'll actually recycle them. And so it's been this environment where on one side is a great amount of goods that the US buys. And on the other side is the amount that is invested in the US. And someone sent me this chart, and it was the change in the trade deficit versus the change in the NASDAQ. And I looked at this thing and I was just shocked at the correlation. Like if the trade deficit goes up, it gets wider, the NASDAQ would go higher. Trade deficit would shrink, it would go down. And I thought to myself, well, this can't be. When I did the old Ronald Reagan trust but verify. So I went and made it myself and I was completely blown away. Like the relationships there, it works. And it kind of made me realize that if Trump is successful in what he says he wants to do, which is eliminate the trade deficit, get it to zero, because don't forget, he thinks that a trade deficit is the US losing. If he is successful in that, it'll actually cause stocks to go down in price. And so, going back to early 2025, I was sitting here and saying all of these policies that he is espousing are bad for stocks. Yet everyone was all excited about it and saying how, this is the most terrific thing, blah, 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 blah. Well, I kept saying, well, listen, this guy loves tariffs. And we have this situation where, he wants to get the trade deficit down. Besant's telling us he wants to get the government deficit down. This is just all around bad. So what occurs is we have this Liberation Day. The trade deficit ends up being way higher. The tariffs end up being way higher than everyone expects. Stock market sells off. All of a sudden, Besant looks at this and says, there's no way I can actually get the deficit down. And he pivots. They put Navarro on the bench, which is like the goofball that kind of made a mess of the trade. Scott takes over. Wall Street breathes this sigh of relief and says, look, an adult's in charge. And not only that, he seems to abandon this idea about balancing the budget. And to your point, your question was like, how do I reconcile this? It's a problem right now because I listened to Scott and I realized that he has shifted from this idea about getting the 3-3-3. What was it? 3% deficit to GDP, 3% interest rates, and 3 million barrels of oil. That was his kind of big grand plan.
Yeah, and he's talking about the 10-year a lot at that time too.
Yeah, so it was 3% 10-year. Maybe that was it. It was, yeah. But regardless, like he had this plan, and now all of a sudden he's like, screw it. We're gonna outrun this thing by growing so much, and so they've completely abandoned this. And I mentioned earlier how the U.S. was running a 7% deficit to GDP. Well, that was last year, and I tracked this. I track kind of on a monthly basis the deficit, and I've been shocked. This fiscal year, and the government ends at the end of September. So between October, November, January, February, March, the deficit has been running like almost 20% higher. So we are running like super, super flat out, like very stimulative. So to me, I kind of have been struggling with this because I was bearish. And I was correctly bearish, and I did stay with my bearishness, and I covered it okay into the decline. But I've kind of gotten, on the subsequent rally, I've gotten too bearish again too quickly. And the reason I think is when I'm thinking about like why am I being wrong? And that's always, I think, important to ask yourself, like, so instead of being like, say, no, everyone else is wrong, you should say, like at the end of the day, my pocketbook's hurting. I'm obviously wrong. I got the wrong call. And I go, why have I been wrong? And part of the reason I think I've been wrong is that I've underestimated their willingness to have massive fiscal deficits. Like I have completely and utterly thought that there was no way that we would be in a situation where it seems to be that they're willing to run this crazy, large deficits with no real sign that any adult is trying to pull it back in. And ultimately, that's why I think we've gotten this just vicious rally. It's because we're still running an extremely hot, economy. So everyone else is focused on interest rates and going, the Fed this, the Fed that. The Fed doesn't matter. This is actually much more a fiscal show. And the fiscal dominance means way more.